Hey, it's Paul Brands, owner of Clear to Close Mortgage with your Monday market update. Hope everyone had a fabulous weekend, spent a great time with the family. And as we begin this week, we are seeing interest rates start to rise. In fact, rates are about 50 basis points higher today than they were starting the day on Friday. Now, what does that mean? That means if you were to be offered a rate on Friday morning, let's just say 6.75 with no points, today that same rate would cost you about a half a point. So if you were getting a $400,000 mortgage, that would be $2,000 in additional closing costs you would need to pay to keep that same rate, or you can always increase your interest rates. So let's go ahead and take a look here at the screen. These are today's average interest rates out there. I'm very proud to say that our rates are still below the average rates, but I wanted to give you an idea of what it looked like out there, or looks like out there. And so let's see why interest rates are starting to trickle up here. It started last week, but let's start with this morning's report. ISM Manufacturing came out, and anything above a 50 indicates growth, right? So today came in above estimates to 50.3, which shows that the economy is starting to grow. Now remember, we're looking to curb inflation, and in order to get inflation down, we almost have to stall the economy. That's why the feds are they're so focused on the job market. And so when you see manufacturing expanding, it shows a very strong market, and inflation may not be under control. Now, speaking of inflation, let's go back last week to PCE, or personal consumption expenditures. Looking at the bottom here, we're very focused on the core year over year, getting to that 2%. Now, remember how we calculate PCE. It's a 12-month average. It's going to be harder and harder to hit the Fed's goal of 2% as we progress through the years, simply because the numbers we're replacing aren't as high as the previous months. Remember a couple of videos back. If you have any questions on that, let me know. But that's going to be a very tough challenge for the Feds. Now, Powell came out last week, and he basically said that we're not too excited, or we're not going to jump too quickly at lowering interest rates. We want to make sure that inflation is under control, and that's why you're starting to see a little bit of upward pressure on interest rates today. Let's talk a little bit about interest rates here. So this is Fannie Mae compared to MBA. And what's really important, and why I'm bringing this slide back up, is because we're always one report away from things changing. So a lot of you are out there waiting for interest rates to decline before you get in the market, which we've talked about why maybe that might not be the best avenue or best approach to take. But take a look here as we starting to see that inflation is not coming down. These estimates of lower interest rates really is not. It's starting to increase. So it's hard to tell when interest rates were going to come down, and a lot of people are out there saying, "Hey, marry the rate," or marry the house, date the rate, with the expectation of rates going down. I do believe interest rates are going to come down, but here's the thing: I can't promise you when or by how much. Taking a look at this chart here. All right, this is a big week. So we talked about manufacturing, we talked about PCE. Jobs is everything. The feds are so focused on the job market, it's almost as if, which is actually true, people have to start losing jobs for interest rates to start coming down. So this week we have ADP and BLS jobs report released Wednesday and Thursday respectively. The market is expecting 130 jobs created in the ADP report and 200 in the BLS. If you see numbers surpassing that, that is definitely going to put an upward pressure on interest rate. We're also looking for an unemployment rate of 3.9. If it's higher than that, that is actually unfortunately good for mortgage-backed securities or interest rates. If it comes in lower, you're going to see that upward pressure. All right, this week ahead we have JOLTS, ADP, which we talked about, initial jobless claims, and BLS jobs report. So I hope that was helpful. If you have any questions, always reach out. Would love to connect with you. Simply scan this QR code. Let's book an appointment. Let's talk about your dreams. Let's talk about your goals. Let's get a plan in place for you. And I would love to connect. Paul Brands, Clear to Close Brokers. Have a fabulous week. Take care.